Hello, everybody. Thank you so much for joining me today. My name is Christian Barnes. I am the founder and lead financial coach of Do Better Financial, and welcome again to Weeconomy Wednesday. I hope your week has gone well so far. We are closing in on the end of June. Mind-boggling, I know. I would like to wish everyone who is a dad a happy Father's Day. I hope you enjoyed it. I hope you got something besides socks and making your own food, even though it was rainy. Today, we are going to be changing things up a little bit. So I have a couple of announcements. Number one, the financial course is coming out on July the 7th. Yay! Excuse my really crappy yelling voice. It is what it is today. The course is going to be coming out on July the 7th. The name of the course is 10 Days to a Raise. So if you are somebody who could use a raise, this course is for you. I'm going to be giving you more details about it in the days to come, but it's going to launch on July the 8th. So stay tuned for that. I'm very excited about it. Our other announcement is that this time slot on Weeconomy Wednesday is actually going to be shifting. You'll notice that today's video is a little bit shorter, and that is going to become more normal unless there's something special going on. So instead of having a whole lot of content on one day, I'm going to have a little bit of content on varying days throughout the week. So stay tuned to see more of that. And today we're going to set the foundation, can't talk, for today's topic, which is insurance. I know it's not exactly exciting, but we need to talk about it. Here's why. It's frequently misunderstood and an afterthought. I actually have a friend on Facebook that works in the pharmacy. She's a pharmacy tech. My dad is actually a pharmacist as well. Shout out to Erica. And it's interesting to see all of the things that she posts about just how little people understand about their actual insurance. Her segment is health insurance particularly, but insurance in general. People have all sorts of misconceptions, and this can actually have catastrophic financial results. So I want you to think of insurance like your vitamins, okay? You need just the right amount, but not too much. So I'm not sure if you know this about vitamins, but if you take more than you need, right? If you take 15,000 milligrams of vitamin C, and I think you only need like 1,000 in a day, you could end up more often than not, it's probably not going to do anything bad to you. You're just going to pee it out. So you're wasting money. Or if you're like me and you take too much vitamin C, you might end up with an icky rash on your hands. I literally had this happen twice. It only took twice for me to figure out what was going on, but it felt like my hands were on fire. And I had drank like a ridiculous amount of orange juice because I didn't feel good, when what I should have done is eat some food, some sort of soup, and laid down. All that to say, when we're talking about insurance, the idea is not to just, spend your entire financial, like all the money that you have on insurance. The idea is to spend just enough to protect yourself, but not to waste money. Because who has money to just pour it down the toilet? I know I do not. Let's just go through what exactly is insurance. It's something that provides protection, mostly financial, against a possible eventuality or an outcome. Now, I made sure I added that last word because I went through this with my niece Leila, who is 12, a few weeks ago. And when I said the word eventuality, she looked at me like I had just, want. And it's one of those words that you know what it means, but you don't know how to tell somebody what it means. So I looked it up. It means outcome. So insurance is providing you protection against something, right? So why do you need that? What do you need protecting from? Risk. You're going to pay a small amount of money for a company to take on a larger expense, right? Typically, like I said, it's financial. So you're going to pay them to take on the risk that you normally would shoulder. So what kinds of risks are we talking about? Some things, like obviously you have small risks, like the risk that you might need a new car battery. That might be $100 or so, depending on what kind of car you have. If you drive a dump truck, it could be $300 or $400, in which case, God bless you. Tires, right? Couple $100. Typically, we can cover that kind of stuff out of pocket, or we can scrounge up a little money to figure it out. But when you're talking about having an accident, maybe with an uninsured motorist, you don't want to be on the hook for thousands of dollars in physical damages and medical bills, right? So when we think about the fact that medical debt is the #1 cause of bankruptcy in America, there is a side note to this that, obviously the whole we don't have universal insurance coverage type of thing. That's the side note on why it is. But the fact is, the current state of America is medicine is expensive. And if you need to be treated and you don't have insurance or you don't have enough, you could end up in a lot of debt. So you want to transfer as much of that risk as possible for a small fee to another company. So like I said, if you're thinking about a car, if you have a huge car accident, and I work in the Galleria, so maybe you have an accident with a Tesla, that's 100 grand right there, right? I don't have 100 grand. So I pay my car insurance company a little bit of money every month so that if I need it, they can pay Mr. Tesla 100 grand. You get the picture. So I'm gonna go over a couple terms to know. So as we go through these different types of insurance throughout the coming days, these things are gonna pop up. So number one is premium. It's how much you pay for coverage, right? So most people, if you own a car in the state of Texas, you have to have a certain type of car insurance. So you may pay that monthly, you might pay quarterly, or you can pay yearly. Now the cost, the actual number of a premium is gonna vary widely by product, right? My sister had two under 27, I think is the number, male drivers on her insurance at one point. And I wanna say it was ridiculous. It was like $1,000 a month. But for me and my husband, we pay like $120. And similarly, between instruments, if you're talking about like a renter's insurance policy, I think ours is like $17 a month compared to like a homeowner's insurance policy, which could be $200 or $300 a month, right? So it's gonna range by product and by type and by what your life is and what you're insuring, and by the company, which is why you should shop around. We'll get into that later. But premium is how much you pay for coverage. Number two, and this is the one that Erica had to explain to a couple of people, deductible. It's the amount you have to pay before insurance kicks in. It's typically gonna be some amount around $1,000 or less, right? I've seen some that have as low as $100, and most of the ones that I've seen, the top end that I've seen is gonna be around $1,000. You may find some companies who will allow you to go to $1,500 or $2,000 or something like that, depending on the type of policy. So when it comes to a deductible, let's use medical for an example. If you go to the doctor and your deductible is $1,000, that might mean that you have to pay all of your doctor bills out of pocket until you hit $1,000, at which point the insurance will kick in. That's what a deductible is. So even though you have insurance, you could still be required, blah, 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 blah. Mouth won't work. Even though you have insurance, you could still be required to pay out of pocket if you have a deductible, right? That's what that is. I think for these terms, a lot of times we go along and just play along like we know what a thing is because we don't want to look stupid. I'm giving you permission and the opportunity to learn without anybody knowing that you never knew. Unless you can tell us in the comments that you never knew, and that's okay. You're learning now. Okay, next term is a claim. So this is going to be compensation for a request of a covered loss. Think the easiest way to think this, we're just gonna stick with medical since I've been talking about it, is when you go to the doctor, once you go in, let's say you don't have a deductible, you don't have any of that, you can just go to the doctor, they will send you the bill later, and they'll usually call that your medical claim. And so what you'll see is like how much the doctor charged and how much the insurance paid and if you owe anything, right? If you're talking about a car, you literally have to file a claim for car insurance to kick in, right? So you might have a small accident, let's say, like me, you've scraped the front of your car on the wall of your garage. Guilty. We have an incline, my car sits low, don't at me, okay? I'm not a bad driver, it's just weird. Anyway, I'm not calling insurance for that, okay? It's a tiny thing, I'm not gonna issue a claim. Now let's say somebody runs up my rear end when I'm sitting at the light on Stella Link, I'm gonna put in a claim for that because it's gonna end up being more than my deductible. Hope that makes sense. So that's just what a claim is. If you have like a claim adjuster, that's somebody who's gonna come out and figure out how much money you should get for the claim that you've issued. You see that more in like homeowners policies and like floods and stuff like that. Last thing that I wanna note, and this is really important, and I'm willing to bet that more people don't know what this is than do, and that's exclusions. These are things that are not covered by your policy. Now again, this can vary widely, but the issue a lot of people have is we don't want to read that fine print. Every policy is going to tell you what they don't cover or what the circumstances have to be for them to cover a specific thing. But if you read through all the fine print, it'll tell you, hey, if you have life insurance and the person who's insured commits suicide, we won't pay out. A lot of people don't know that, right? So as we go through all these different types of insurance, I want you to keep in mind that exclusions are things that are not covered by your policy. It's going to vary. You need to read the fine print, but we're going to go through some examples. So some of the categories we're going to cover are things like car insurance, life insurance, health insurance, long-term care, and a few more kind of bits of odds and ends that you may not even know existed or that you may have and not actually need. So we're going to walk through those. We're going to talk about the other terms that you need to know for each specific category and how to shop for them. So if you're going to journey, I want you to join me on this journey through the preventative medicine for your wallet. So that is going to wrap up this Weeconomy Wednesday. And thank you for joining me for the first video of Small Change. Have a good week. Bye-bye. Hi, thanks for watching. Please like and subscribe. You can click over here, or maybe over there for a video that you might like to watch again. Bye now.